Official jobless claims are hiding a massive problem where 3 out of 4 unemployed Americans aren't even being counted.
Former Fed insider Danielle DiMartino Booth explains why the central bank is staying paralyzed despite a freezing housing market.
Former Fed insider Danielle DiMartino Booth says the central bank is going radio silent right when we need them most.
Right, she's watching Kevin Warsh at Jackson Hole, but expects him to say absolutely nothing about interest rates.
Why stay quiet now? Isn't PCE still stuck at 3.7%?
Booth's take is that the Fed is effectively paralyzed until the election is over.
Even if non-farm payrolls go negative next Friday, she thinks they'll hold steady to avoid looking political.
So they'd actually ignore a bad jobs report just to stay out of the headlines?
That's the risk, especially because Booth says the official jobless claims are hiding a much bigger problem.
She pointed out that we're only seeing 1 in 4 unemployed Americans in the actual claims data.
Wait, so 75% of people without jobs aren't even being counted?
It's showing up in spending. Furniture sales are down, and Home Depot CEO says the housing market is totally frozen.
And it's not just big-ticket items. Inflation-adjusted wage growth was negative 2.5% this quarter.
So we're working more, but actually falling behind on the bills?
So if the economy's cracking, what's the move for Kevin Warsh tomorrow?
Booth expects him to focus on modernizing the Fed and payments processing, staying completely away from forward guidance.
Basically, a lot of talk about tech while ignoring the fact that gas is still over $4.
To see if she's right about the dollar debasement, we have to watch the 99 level on the dollar index.
And keep an eye on Treasury Secretary Bessent. If those buybacks jump from $4 to $8 billion, the dollar could take another leg down.
So if the dollar stays at 99, the Fed's plan is working?
Nick Gerli is sounding the alarm on Florida housing, claiming we are seeing a legit 2008 repeat in some cities.
2008? That is a massive call. Is this just one bad neighborhood or a statewide problem?
It is starting in high-growth pockets like Davenport, where sellers are already eating $100,000 losses on their homes.
The anchor of the case is mortgage distress. Florida just hit #1 in the nation for foreclosures.
So the state everyone moved to is now leading the country in defaults?
According to the data, 1 in every 2,300 housing units is in foreclosure right now, which is 10 to 20 times higher than the low-distress states. Look at Charlotte County. Values there are already down 22% from the peak because that pandemic migration boom just vanished.
If prices are only down 5% on average, why are we seeing these huge individual losses?
Because the averages hide the carnage. In places like Polk County, buyers with zero-down FHA loans are underwater and forced into short sales.
The big money is bailing too. Wall Street investor purchases have crashed 50 to 70% over the last 4 years.
Is that because they can't find buyers or because the math on holding rentals is broken?
It is both. Insurance and taxes are spiking, while companies like Main Street Renewal are actually cutting rents to keep units filled.
The wild card for late 2026 is a ballot measure that could hike the homestead tax exemption to $200,000.
If that passes, does it actually provide a floor for the market?
It might boost demand for primary residents, but if the foreclosure rate keeps creeping up from its current 0.5%, a tax break won't stop the momentum.
For anyone looking to buy, Gerli says ignore the official appraisals and watch the short sales.
When a house sits on the market with a 30% discount, that is the real market clearing price, telling you where demand actually lives.
Welcome to our analysis of the pre-market prep focused on the upcoming Jackson Hole meeting. Kevin Warsh is taking the podium today, and the big question is whether his new task force plan saves the tape or blows up the bond market.
Matt DeWolf is watching that 10 a.m. kickoff closely because Warsh is expected to signal a complete overhaul of how the old guard handles the playbook.
So if he comes out too dovish just to please the crowd, does the market actually punish him for having no spine? No.
Exactly. The Fed Watch tool shows a 64.1% chance of a pause in September, but the bond vigilantes will revolt if he ignores the hike already priced in for December.
It is a delicate balance between credibility and shifting market expectations.
Technically, the S&P 500 futures have set a higher low at 76.55, but can they actually hold that through the speech?
They have to. That is the line in the sand for the 4-hour trend. If we slip under that, the hourly trend flips and the bears take control of the weekend.
If 76.55 fails, does the whole bull case fall apart for the week?
What happens if rates keep drifting up while he is talking?
If the 10-year yield crosses 4.7%, it is a breakout of the balance range. That move would start yanking tech and high beta names lower immediately.
Higher yields are definitely acting like an anchor on the tech sector right now.
Are we just looking at a Warsh headline, or is there more data hitting the tape today?
It is a perfect storm. We have the preliminary payroll revisions and consumer sentiment hitting at the exact same time as the speech.
So 10 a.m. is the flashpoint for volatility that could catch traders off guard?
So do we just sit on our hands until the dust from Jackson Hole settles?
The plan is to watch 77.25 on the ES. If we hold that as a higher low after the initial spike, the bullish case stays alive.
Just remember the Friday rules. If you are green, keep it green, and do not blow up your account before the weekend.
And that's the full rundown for today. Want the final verdict, where these experts agree and where they clash head to head? It's in the video linked below.
Give this a like if it saved you time, and subscribe so you don't miss tomorrow's breakdown.